Best has a negative outlook on the insurance and reinsurance markets of the Gulf Cooperation Council. AM Best has recently published a report looking at why this outlook is negative. And I'm Yvette Essen for AM Best TV and joined by Salman Siddiqui, Associate Director of Analytics for AM Best. Salman, there are a number of reasons why we have a negative outlook. Can you highlight a few of them, please?
One of the biggest reasons for the negative outlook is the level of competition in these markets. Now, we've seen some consolidation in the market in terms of via M&A activity. However, the number of companies operating in these markets relative to the premium still remains quite high. For example, in Kuwait, we have 30 companies, insurance companies, operating in that market for a very small amount of premium. Now, the pricing pressure overall has abated a little bit, primarily on the motor and medical lines, thanks to regulatory intervention. However, overall, because of the level of competition, the level of pricing pressure remains quite high, and as a result, we expect to see some pressure on insurance margins. Along with that, we've obviously got the low oil prices, which has affected fiscal spending by governments in the GCC. Now, this has dampened growth prospects for engineering and construction business lines. Alongside that, the low oil prices have meant that governments in the GCC are looking to implement VAT for the first time in the part of the world. Now, VAT is a relatively new concept in the GCC, and as a result, IT systems are not prepared for it. So insurance companies will incur a one-off cost to refit their IT systems to deal with the VAT regime. Additionally, some companies have said that they're not going to pass on their VAT costs to their retail customers, and instead absorbing them themselves in the first few years. This will obviously put pressure on their insurance margins.
So there are quite a few reasons why we've got a negative outlook on the sector. Can you tell me something positive about it though?
There are some positives. One of the biggest positives is on risk management. We're seeing an increased focus on risk management, particularly in 2016 and 2017. Some of that has been driven by regulations. Now, in the past, this part of the world has had very poor risk management culture and poor corporate governance. But regulation has meant that companies are now focusing more and more on things like pricing, reserving, management of their investments and exposures. So overall, in that sense, it's positive. However, the overall risk culture does remain quite poor in the GCC, and it's an area of continued concern for AM Best.
You mentioned earlier merger and acquisition activity, which was very much a trend in 2017. What are your expectations for 2018? Will this trend continue?
I would expect it to continue. I think if you look at some of the reasons behind the M&A activity in 2017, some of that was driven by improving distribution capabilities, and some of that was driven by increasing their economies of scale. So if you look at regulatory requirements to have actual pricing, and if you want to be competitive as far as pricing is concerned, you need to achieve a reasonable level of economies of scale. And the easiest way of doing so is via acquisition and combining balance sheets. So I do expect this trend to continue. We also see regulators are quite encouraging of consolidation. They want to have fewer companies in the market. So those two things should drive some increased M&A activity in 2018.
You've also referenced balance sheets there. How would you describe the balance sheets of the companies that we rate in the GCC region?
Overall, I'd say the rated insurance companies and reinsurance companies in the GCC are well capitalized from a risk-adjusted basis. They benefit from large capital bases. They have low premium retention and reinsurance panels of very good credit quality. However, investment operations and large real estate and equity holdings continue to weigh down on risk-adjusted capitalization. Investments have seen some volatility in 2017 and 2016, and we expect this volatility to continue in the backdrop of the macroeconomic situation and some of the geopolitical issues within the GCC.
Great, Salman, thank you for explaining that. A copy of AM Best report on the GCC with its negative outlook can be found on AM Best website, ambest.com. For AM Best TV, I'm Yvette Essen.